current tax rates, charges, and fines should be reviewed upward. One of such rates is the VAT rate. In fact, Nigeria's VAT rate is known to be among the lowest in the world. An upward review from the current 5% to between 7.5% and 10% is therefore recommended.
The taxpayer will choose the location of where he wants his tax file to reside, meaning that no taxpayer will have to travel for more than 30 minutes to see his account officer.
From the not so cheerful to the very cheerful. Those sound bites are from the just concluded 2-day National Revenue Retreat that was held in Kano between Thursday the 14th and Friday the 15th of July 2016. So much transpired at the 2-day retreat, but it seems that the suggestion, the proposal by the acting chairman of the Revenue Mobilization Accounts and Fiscal Committee seemed to have grabbed the headlines, so much so that the impression has been created that that was what it was all about. No, far from it. It was in fact a robust session where all ideas were allowed to be brought on board, were fully digested and distilled towards ensuring that Nigeria returns to the path of prosperity. The suggestion by Malam Abagana was very well discussed, and at the end of the day, a compromise was reached as to whether the rate of VAT should be increased or not. If you want to hear reactions, if you want to see the reactions to Malam Abagana's suggestions, pick a cup of water, sit down, and enjoy the episode. The program is Tax Matters, and my name is Olumoyiwa Matuluko. Welcome once again. As part of its own contribution to the collective efforts of Nigerians to ensure that this country returns to the path of prosperity, the Federal Ministry of Finance organized a 2-day National Revenue Retreat that was held in Kano between Thursday the 14th and Friday the 15th of July 2016. Mr. M.K. Dikwe, Director, Special Projects, Office of the Honorable Federal Minister of Finance, was the retreat coordinator.
I stand before you today to give an overview of this important National Revenue Retreat organized for Directors of Finance and Account, internal auditors, revenue officers, and other relevant stakeholders in the nation's revenue administration. The dwindling national revenue that has constrained optimal performance of government at all levels to provide a basic services to the citizenry has necessitated this retreat. Today, we are already in the second half of the year, and our revenue performance is far below the budgeted targets. This retreat is therefore aimed at identifying the real costs, issues, and challenges confronting the administration of the internally generated revenue with a view to provide collective solutions to the acute cash flow shortage to finance our budget.
Continuing on the same trajectory, Accountant General of the Federation, Alhaji Ahmed Idris, painted a gloomy picture of the current revenue profile of Nigeria.
The shale oil exploited or explored in commercial quantity in the United States, coupled with other vagaries in the international market and our internal issues surrounding oil exploration and development, brought us to the present state whereby revenues accruing to government has significantly gone down to the extent that government is now only earning about 36 or 38 thereabout % of what government hitherto earned. Also, some African countries have discovered oil in commercial quantities for both local consumption and export. All these have significantly and negatively impacted on the mono economy of our nation, Nigeria. A clear option for diversification of the economy through non-oil, such as solid minerals, agriculture, reform in our taxation system, and making the best out of our comparative advantages are key solutions to our present predicament.
The suggestion of the Accountant General for a reform of the Nigerian tax system was very well addressed in the paper presented by the Executive Chairman of the Federal Inland Revenue Service, Mr. Babatunde Fowler. We will come to that shortly. The host governor, Alhaji Ganduje, delivered a keynote address, while the Honorable Federal Minister of Finance, Mrs. Kemi Adeosun, declared the two-day retreat open.
Our administration is committed to utilizing all available sources of internal revenue as alternatives to Federation account revenue. The vision is that by the end of 2016, the total recurrent expenditure of the government should be adequately covered by the state's internally generated revenue, and that by the end of 2017, the whole of the budgetary expenditure of the state should be substantially covered by the IGR of the year. As this vision is actualized, a great percentage of the state government's share from the Federation account is to be lodged into future generation account, which is to be deployed to prudently provide for qualitative education and sound healthcare delivery services from the primary to tertiary institution levels, thereby developing huge human capital.
I have often said that Nigeria needs to see itself not as an oil economy, but as a great economy with oil. And there is a clear difference. Nigeria generates approximately 2.2 at its maximum barrels of oil per day, but we have 160 million people. Saudi Arabia generates around 10 million barrels of oil per day, but has 8 million people. Qatar, 7 million barrels of oil, less than 2 million people. So we cannot continue to operate as an oil economy. Oil must be downplayed in the economy of Nigeria, and it must be downplayed in the revenue of Nigeria for us to be sustainable. We have recently, with our state governments, put together what we've called the Fiscal Sustainability Plan. And we have told state governors that the definition of IGR has changed. It is no longer just taxes and fees. In some states it is rice. In some states it is corn. Whatever you have in your state has to be maximized. And that is the way to go. And as we do so, we will get to the point where we really don't care what the price of oil is. That's the vision for Nigeria's economy, so that we can be responsible and be masters of our own destiny.
The Honorable Minister made a promise.
Our revenue focus will not burden Nigerians in their daily lives, but will rather ensure that all revenue due to Nigeria's government, irrespective of the source, is collected with a high degree of efficiency, is fully receipted, properly accounted for. Making every naira count is a commitment and a policy focus, and it is not just a slogan. The focus of this conference is on non-oil revenue generation. The role of most of us seated here in oil generation is minimal. Indeed, many of us have never even been to where the oil emanates from. So we must focus on what is around us that can generate revenue.
It's a new dawn in Nigeria, and the mantra is change. The wind of change is blowing all over Nigeria and beckons to you. One sure way to respond is to perform your civic duty, pay your tax. With taxes, government generates revenue to fulfill its electoral promises, ensure regular power supply, provide good security, standard education, medical care, true total change. Individuals and corporations enjoy specific benefits, rights and privileges for paying taxes and avoid the consequences and penalties of not paying. Oil revenue is no longer sufficient to bring desired change, but your tax can. It pays to pay your tax. A message from the Federal Inland Revenue Service.
Welcome back. It is indeed a season of change, and like the Honorable Minister of Finance said, making every kobo count is a commitment and a policy focus of the government, and it is not just a slogan. We are sharing with you what transpired at the two-day National Revenue Retreat that was held in Kano from Thursday the 14th to Friday the 15th of July 2016. The focus was revenue generation, but not just any revenue for that matter, non-oil revenue. The number one tax officer in Nigeria, in the person of the executive chairman of the Federal Inland Revenue Service, Mr. Batunde Fowler, rose to the occasion in his paper.
Now, I would just like to first of all paint a little foundation, first of all, and why we have to look at other sources. Between January 2014 and January 2016, there has been a 70% drop in price. We have a target to export or to sell over 2 million barrels of oil per day. But one thing about any sale is that you have to have a buyer. The market right now is getting quite flooded. OPEC has not come up to an agreeable amount of production per country. We did a little calculation, and we said if we continue expecting revenue from oil, at what price do we have to sell it to fund our budget? It came to $123 per barrel. We're now averaging 40. So even if we look at the possibility of us funding the budget, the current budget, that means the price has to go to $123 per barrel, and at the same time, we have to be able to sell what we produce, regardless of the fact that the US has started to export oil, regardless of the fact that shale oil is also available. Between 2012 and 2015, the non-oil accounted for between 30 to 45% of income. In 2016, we have projected that FIRS will contribute 84% of the budget. Some people might say that that is a very tall order, but in fact it is. And you might ask why we decided to give ourselves that target. Now, between that same period of 2012 and 2014, the performance of FIRS in terms of its budget was as follows. In 2012, we did 137% of budget. 2013, 107%. 2014, 115%. And 2015, 81%. But the question is, why were we doing over 100% of budget? Number one, the oil price was at a peak. So the PPT was higher than expected. And if you review or remember the years of the budget, the market average price was always higher than the benchmark. This is the first time in the history of Nigeria whereby the approved budget benchmark for oil is actually lower than the actual price it is in the market at present.
Now to the strategy.
Now, how are we going to grow the non-oil sector? And I'm going to tell you a few things that we currently have done. First of all, when you're talking about taxation, you can't talk about taxation only at the federal level. The objective and the mandate of FIRS is to fund the federal, state, and local governments. So any month that we don't do well, that means those three tiers of government also do not have revenue. Second, as the chairman of the Joint Tax Board, which is made up of all the state internal revenue boards and the FIRS and other members, we noticed, and if you read the papers over the last 2 to 3 weeks, some consultants have been doing certain analysis of the performance of the various states. Out of the 36 states, over 32 states still rely above 90% from the federal allocation. Now, the question is, what is our position now? At the Joint Tax Board, we found out that we have 10 million registered individual taxpayers. In the small-scale industry, in the informal sector, they have officially 37.5 million individuals. So from our own records, we expect to have at least 50 million individuals within the tax net. FIRS had actively about 145,000, and within the tax net, a little over 500,000. Within the last 120 days, we've added 700,000 companies to our tax net, taking it to about 1.2 million. Now, in adding them is one thing. The other thing is, are they paying any taxes? And how did we go about it? First of all, we had an agreement with all the state boards of internal revenue, and we exchanged information. We gave them the names of all our taxpayers in their respective states, and they gave us the names of all their own taxpayers also. So we first of all had a boost from that exchange of information, and then we went out on the street. If you went out of the hall to my right, you see a little table. They are members of what we call FEET, that is Federal Engagement and Enlightenment Tax Teams. And they go around educating people and registering both individuals for the state and also corporate accounts for FIRS, and telling them about the payment of tax, they need to pay tax, and we've done that for the last 6 months, which was part of the strategy.
Still on strategy.
There are laws on our books which will enable us to seal up companies, to prosecute individuals, but we first of all wanted to make sure that everybody has the required knowledge as to why taxes should be paid, how it should be paid, and also to make it convenient for them. And I think we have done that. For the second half of the year, we're going to focus on enforcement and also to ensure that we can audit most companies to ensure that they're paying the correct amount of taxes. There are certain laws that mandate organizations to remit their VAT and withholding tax on a monthly basis. We have moved that figure from 33,000 to 77,000. But what that means is that less than 8% of the companies who are supposed to remit VAT are remitting VAT. We have looked at the sectors that are highly responsible for this non-compliance. And I'd like to remind everybody here that you pay tax on income or profits. So it's not saying that we're going to increase the burden on those that have no money. We're talking about people in the aviation sector. We're talking about people in the telecom sector. We're even talking about multinationals that have not paid or remitted VAT, and indeed people in the oil and gas sector. So we have got those names, and from this month, and I'm sure over the last month or so you have heard and seen us sealing up notable names for default of taxes. We have distrained 69 companies in the last 6 weeks or so, and they had outstanding bills in the region of about 5 billion naira, and I think about $26 million. And there are more to come. Now, if you look at our performance to date, we do not think that it is anything that we should celebrate at present. But from our own timetable, June 30th is basically our own year end, because the law gives all organizations that have a December 31st year end 6 months to file their returns and pay their taxes. So we have built our tax base up to 1.2 million, but as of the 30th of June, just last month, only 77,000 companies had filed returns on a self-assessment basis and made any payment. So there is a wide gap. So at FIRS, we have looked at our performance, we have looked at our weaknesses, and we have looked at what is needed to be done. This is also a period whereby people apply for tax clearance certificates. So we have a lot of people knocking on our door because they want to get government patronage or they want to get business, and they're asked, where is your current tax clearance certificate? We looked in-house as what had happened in the past, and out of the certificates issued by us last year, we found out that over 42,000 tax clearance certificates were issued to companies on a nil balance for 3 years consecutively. Now, the irony is that if you're bidding for a contract and they ask you for a tax clearance certificate and you get a tax clearance certificate, you have actually fulfilled that obligation regardless of the amount on the tax clearance certificate. But what it means in real terms is that some of those companies that were giving clearances on a nil value basically did not do any business. But between you and I, we know that you will not register a company with no intention or have that company idle for 3 to 4 years and then wake up one morning and say you want to get a contract. We have looked at some of them and we have changed our process. Now, if you want a tax clearance certificate and you want it for nil amounts, if your company is less than 3 years or less than 2 years, on the first 2 years we put not applicable, the last year nil. But if your company has been registered more than 3 to 4 years, it has to come to headquarters for us to verify indeed that you've had no transactions, no money going into your bank account, because I've seen companies that had millions in their bank accounts, but said they did no business. So the question is that, why would you have millions in the bank account and want a nil tax clearance certificate?
The worry man will say, alarm don't blow. It is no longer going to be business as usual.
But also, part of our responsibility is to improve our level of efficiency. And in the next few weeks, you'll see some things in the national papers whereby we're going to let people know the new process for obtaining a tax clearance certificate. And within 2 weeks, if it's not given, a number will be given for you to make a report.
Mr. Fowler also spoke on automated VAT collection.
We've also looked at improving the level of transparency within the organization, and that's through the use of technology. Now, we have people in the aviation sector, and we have software, a very simple software, which will enable them at the point you buy your ticket, the VAT portion or any taxes that are due to government are remitted immediately. And we have 1 or 2 airlines that have signed, but to date have refused to use that application. So I am telling you now that for those of us that have to fly a lot, for the next month or 2, we might have to go by road because we'll close down those airlines. The issue about taxation is that sometimes when you're making or bringing about changes, there will be a level of inconvenience. And these people operating these airlines are expanding their fleets, and usually they're full of passengers. So it is now time to enforce that.
Again, we say, alarm don't blow. Airlines, watch your back.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax.
There's more, especially on VAT. For example, Mr. Fowler went on to speak about the refusal or failure, if you like, of the various state governments and ministries, departments and agencies at all levels, as well as local governments, to deduct VAT and withholding tax from contractors' fees and remit into federation accounts. And of course, what we were expecting at the beginning, that suggestion by the acting chairman of the Revenue Mobilization Accounts and Fiscal Commission on increasing the rate of VAT in Nigeria. All that will come to you next episode on this same station, same day of the week, same time of the day. Keep a day with us. Bye for now.